I am in a full Mark Knopfler rabbit hole. He's my favorite guitarist, my favorite sound, uh, and his dirges will just make you weep. He can make you
Yeah.
weep with his guitar sound. That song, "Brothers in Arms," a great dirge about the futility of human warfare and what it does to poor male souls on the battlefield, and females too, from the history of nurses on the front lines. I mean, just brutal PTSD. Anyway, I'm sorry for bringing it in on such a sad note. let's bring it up a little bit. Let's talk trannies, Matt. Let's bring it up. Wait, that's not the
Transportation
one.
index.
That's
Transportation.
not
That's
it.
what I.
Let's talk. We talked about this yesterday, and boy, were we right on with how this guy was going to change the program immediately. How would you not want to play for prime time? I mean, he was a fantastic player.
From the people, of the people, for the people.
And he dresses great. He's flashy. He's articulate. He seems
believes
like
in
he's
God.
always he's having a nice time, it seems, most of the time.
He's a preacher.
Anyway, 200 recruits and portal transfers have reached out in just 12 hours. Matt, we shared yesterday 1,000 kids are in the transfer portal. Seemingly, if these were just transfers, he's got 20% of the portal wanting to go to CU.
Yeah.
Crazy. And they're coming from all places, Matt, all points in the college map. Virginia, Texas A&M, Clemson, Ole Miss, Washington, from sea to shining sea.
Yeah, and that's a lot. I mean, 11 is half of your annual, year. So that means you got 30 spots to fill for this year, which means you only have 50 scholarship players left on your team. That's a lot of mutiny. And that's happening. I saw Florida had a bunch of them dump in there today. And again, the warning on all this is you may not be picked up, and then your scholarship and any bills that you owe, that you make sure your bills are paid before you leave Virginia Tech, before you put yourself in there. Make sure you have no outstanding bills, because they'll yank that scholarship from you, especially if you talk to the compliance officer and told him, you better make sure those bills are paid before you leave too, because you don't want to, you don't want the trail of debt to follow. I mean, seriously, like these players, I mean, and I know they tell them this, or at least they sign it, but they probably don't, always tell them. So please be careful. The grass is not always greener. This is, always a lesson in life. Like, just because, maybe you got an extra $20,000 a year. Well, maybe you're working an extra 100 hours a month. I don't know, it's not always greener on the other side. And especially with the emotions involved in sports. Sit with it.
And everybody's going to the NFL, and
and yet they're not.
Right, exactly. Get your education.
Get your education first.
Education. All right, Matt. Let's talk edibles. We have a lot of health theming going on today. Marijuana related ER visits, not the only ER visits that we're going to talk about today, by the way, rising dramatically. Edibles sparking particular concerns. You got to be careful when you eat THC, man. You have to. More people end up in closets fucking chewing on their fingernails.
Well, and especially now, so many people have never even touched marijuana, or their friends are telling them, take an edible. It's not smoking it. It's an edible. Well, if it's 2 milligrams, 10 milligrams, 20, 100, you don't know until you've taken 2.
Not only that, the dosage is not science. I don't give a shit what you tell me, even if you're buying it from a store.
And it's like I said, everybody's a little different. What did you eat? What didn't you eat? How's your body react?
All right, let's go to Surprise Discover. What do we get? What do we get? Let's talk mushrooms. Forget about the marijuana stocks. We pounded them to death.
Yeah, let's talk shrooms, because they're the only publicly traded stock, of course, is our favorite Compass Pathways, and we haven't talked about it in a while. And so this is another good time to talk about it. It's been as high as 60s. and now trading back here down to the 10s. Again, this is a long-term chart. Let me pull back a little bit just so you can see some different time frames. But this is, to me, looking like if you want an area probably to start accumulating. We had talked about this, last spring when it was down here in the 7s, 8s. I think now, down here to the $8 level again, we haven't even really gotten down to that level. But any pullbacks that you're seeing as we're putting in this time, again, this chop is just, it's a couple months long down here. It's not super long, but it's a couple months long. And I would say, that this thing will probably get a run again whenever some news comes out, on psilocybin, et cetera, studies and there's ongoing things going on. So this is the type of thing when it is the only publicly traded company in the market, it's good and bad. But right now, I would say it's probably to the good side on the risk levels. If 6 is your bottom, then you're really only risking 40% here at $10.
Crazily in this market that's actually a thought process.
Well, I mean, you have to think this way.
Right, exactly. Of course you do.
Yeah.
Absolutely.
So, yeah.
So buttons. All right, man, let's get
and again, earnings, the last earnings, and again, there's definitely no earnings here because they don't really sell anything. They have no revenues. It's a research company. So understand that it's pure spec play into the psilocybin market at this point.
Right on. Speaking of mushrooms, Matt, let's go to the store. We go to the store every day. Not that store. We go to this store. We go to the Absolute Horse what, Matt? Absolute
Shit.
Horse what?
Shit.
Absolute horse shit. That's our segment, Absolute Horse shit. And Matt, I'm going to share a screen because the Absolute Horse shit story today, by far the winner, is an ongoing thing right now. I need to share. No sharing available. That's absolute horseshit on a daily basis, by the way, in this segment. Absolute horseshit. Let me share. Stall number 2 has a fresh dump in it, Matt, and and I want to say that it's well. Here, let me go here first to show the absolute horseshit going on, and this is happening right now. Senator Ron Johnson from Wisconsin, the great state of Wisconsin, the cheddarhead himself, is doing a live stream right now. It has to be on Rumble because they were afraid that if he was on YouTube, it would be shut down. And this is it. And it's the COVID. We're back to COVID, the COVID vaccine injuries, how the insurance company is looking at this now, the real reporting. The CDC, I did not know this, has a new site called VSafe. That's different than VAERS, but apparently it is equally as corruptible from the CDC. You got to watch this. I'm sure there'll be a replay on this, but when you watch this, if you don't like throw up in your mouth, there is something really wrong with you. There is something seriously wrong if you don't throw up in your mouth when you watch this. And this is one thing that they shared, Matt, and let me just bring it up here because it's going to, you don't need to see me when you see this. This is the absolute horseshit of the day. The fact that this hasn't been talked about more. UK government data shows that they're vaccinated now suffer higher mortality, Matt, and not just a little bit. Age stratified analysis shows a 26% worse mortality rate for vaccinated. Vax under 50 show a 49% worse mortality rate. And the confusing thing is if you just got one jab, the data is showing that you have 145% worse mortality. Take a hard swallow on that one. Mm-hmm. Matt, what time is it? It's 10:02. Do you know where your spike protein is?
Yeah.
That's a little check-in for you. Anyway, Matt, we thought we'd go to on the price discovery side from this. You shared in the network.
I saw a Reuters headline today that basically was talking about a life insurance transaction. Generali is one of the larger life insurance companies, planned sale of its $21 billion Italian life insurance portfolio. And again, price discovery shows up in the news feeds often, and so we brought up a chart of Generali, which trades probably most robustly on the Milan exchange there in Italy, and it trades a lot, 3.5 million shares a day today. Already done that. Well, we're over, I guess, in Italy already, but
Right.
$27 billion market cap, paying a 6.2 dividend. But the interesting thing is over the last, this is just really the last year, been as high as 21, been as low as 13.5. And now we're kind of rallying back to this underbelly. And then you and I were looking at the longer term charts on it, going back years. And this thing, peaked really in 2007. It's never really, since then, when it broke, we've been in this bracket for 15 years, let's call it. And so that tells me something underlying in the hood is wrong fundamentally. If you can't go back and test these highs.
Well, for sure, too, though.
In 15 years, they're still paying a dividend, so they're still receiving premiums and all that. But
interesting, though, that they want to lob their life insurance company, which generally
because
that
business,
a great cash cow, right?
That business has always been, and you want to see where Warren Buffett and Berkshire makes their money is in reinsurance and life insurance and all these premium products where you can really, spread the risk out.
And define the risk and actually
spread it out with the stats that are available. So the models are clearly out of balance right now, and Ron Johnson is trying to expose this. There's many people trying to expose this. The insurance companies, I think, no. And again, we have a lot of questions, and I'm sure they have a lot of questions. But again, you see that spike that we've had recently. By all means, this might be the time, and this type of transaction would probably be, and it's barely up on that news today, also. So, unless it came after the close, which it could see a spike tomorrow. So if you get that spike tomorrow, maybe that's the time you want to exit. But this thing doesn't, it's at the top end of a range that it's been playing in, really 9 to 19, the $10 range, and paying the dividend. That dividend might be at risk. I don't know.
I think it's interesting, though. It becomes less of a risk if they offload the life insurance component of it. That right. Actually becomes more attractive on breaks if they don't have the life insurance risk.
Right. And then you brought up a couple other names that I thought we'd take a look at because we have not looked at these. So Prudential, which when did they used to be Pru. Obviously, they went public-private, I think, a few times there in the 80s, 90s. But I mean, puke is the worst symbol, especially for an insurance company.
especially with excess mortality risk.
Yeah, I mean, I just got to say. But anyways, this thing, again, not doing so well down here at 17 most recently, and has rallied up here to 25, 26. But the long term, again, this is going back to 2009 also. So obviously these things don't do so well in difficult economic environments, and that's probably why it's going down here again, because people are poorer, they have less insurance. So there's less people paying into the pot and more people getting paid out, right? Because they're not doing so well. VOYA, I see their ads for financial services on TV. I don't really understand their business model. But
I mean, it just came up in
they do everything. I know that they do
right.
workplace stuff. They do, they do 401ks. They do it all. So this one's not a straight insurance play, Bob. But again, market cap $6 billion, pays a 1.26. Let's go back to Prudential just so we can look at the dividend they pay 1.34. Not really big there. And then you gave me another name to look at.
A reinsurance group, RZB, right. As far as
RZB. So again, reinsurance. So this does pay dividends, 5-6%.
And this might be their bonds. You know what? Yeah, this is their floating debt.
Well, that's what you gave me. So,
well, it's price discovery still. If they're paying out way more premiums, they're not going to be able to.
And then RE is not reinsurance. So I don't know what the symbol is for that other for reinsurance. So can't help you there. Sorry.
Anyway, I think this is a developing story that it's clearly in the data now. Clearly in the data, even from the government's own VSafe site, 10 million people joined that portal and they showed over time 7% of them needed a healthcare visit from the jab. 7%.
Well, 7, yeah. Well, I will look at this for you. This is MetLife. MetLife has gone from a COVID low of 23 up here to 75, so a 3-bagger. And again, paying a dividend of 2.66%, just throw in another name for you. So there you go.
What do you think? I mean,
That's bullish.
What a run.
It's been bullish for a couple of years. So until it really kind of breaks under 55, I think you can probably buy the dips down to 55.
Right on, right on. All right, Matt, the other thing I wanted to cover is a story that you shared with us in the group. And I had seen it on a Twitter thread also. And my angle here, Matt, is that FTX, right, gets a lot of grief. Crypto exchanges that can no longer pay you your money. This was an interesting one though. Blackstone, 69 billion REIT says, sorry, you can't have your money right now.
Well, yeah, and they said
and this is right there. This is a public company. Blackstone is a public company, but they have non-public REITs. If I read this correctly, it's not a publicly traded.
Yeah, they put together portfolios that are very liquid, and so therefore they've got gates on there at like 5%, and this was 5%. So basically, any type of redemption in their paperwork says once we get to 5%, we have to stop redemptions. So they hit that number, which it's only 5%, but that's there to prevent a run on illiquid assets, of which they have tons, because it's a $1 trillion outfit, multi-trillion-dollar. Because these guys are with the elites. These guys are with the horseshit show. So
let's. I do have the stock here, I believe. BX.
Yeah, okay.
Blackstone. This is the monthly, and it is
it's been hideous.
It is clears throat. Falling out of bed on the monthly. Falling out of bed.
Mm-hmm.
COVID low down here at that low, $33, Matt. Still a half off available, half off plus as it's trading 78.70. I'm not sure what going forward saves this. You can show me a profile.
Klaus Schwab, named as the leader of the free world, might say that.
Show me the profile on it for me. BX is the symbol, Matt. BX. Show me the profile, because from standard deviation modeling on that wide fractal on that monthly, it is absolute horseshit. That stock. We're done with that segment. Take the backing away. All right. I'll do it.
So BX on a monthly chart. Yeah, I mean, it's only been trading since 2008 during the last bottom. And to me, it looks like it wants to go back. I mean, it really hadn't traded much above, it was kind of in that tight range for a good part of 6 years until COVID came along. So again, you want to see a story of what the elites did for some of these people, that no wonder they were going along with it. Look how freaking wealthy, the elites got at Blackstone when this thing went from 30 on COVID day all the way up to 150, a 5xer, and we're talking, multi-trillions under management here. This isn't a small entity, Bob. So that's the thing that people don't get. This isn't, it's one thing to move. It's one thing to move Facebook or Netflix, which are not small companies either, but they're nowhere near the size of Blackstone. And it's one thing to move this thing. And yeah, it's just purely falling away. And this hasn't even, on the monthly, it hasn't even rolled over yet. It hasn't rolled over since 2015.
It's staggering. It is staggering.
Now on the weekly, it has, right? It keeps giving you these fake little every little has been met with ouch. So, and nothing, for me, this is just falling away. It's got to get down here. It's got to get at least down to the 55 level, right? That's kind of where we settled after the initial bounce in June of 20. And then that's when everything went crazy. So everything will come back to this. So yeah, I don't see any reason why redemptions won't continue, because again, pension funds are in trouble. Because of the illiquidity of all this stuff, that a lot of these people and a lot of these people now are saying, we don't want you to touch our money. That's why they're pulling it out. They're pulling out the safest piece they know they have in Blackstone, and even that they're going, we don't want no Moss, Blackstone. We don't like your business. We don't like your models. We don't like your ESG. We don't like, and again, this is where I have hope that there are some intelligent people in these pensions. They should have never put their money in here because they didn't do their homework. Now that they're seeing people like Ron Johnson and talking about the reality of these narratives that were completely bullshit, people are going to be like, no, we have to be fiduciaries for our pensions. We got to take the money out of it. We can't trust these guys. And so I think that will continue.
The other thing I saw on in the thread was they don't mark to market, which is insanely stupid too, right?
Right.
But they also don't mark except yearly to the net asset value of their real estate holdings.
Right.
And so people know that it's going to be terrible. That's where they're trying to exit the door on the REIT. And apparently they're not going to be able to sell property fast enough in 2023. 2023, right. A lot of different angles. A lot of people that we follow, good luck. Have a nice Christmas, because I don't know what else to think coming down the pike. What else you got? Anything else jumping out?
Yeah, I do want to talk just a little bit about bonds, because that's what we do here. We talk about bonds and we're making new highs. I want to do it by, showing the ultras, and we can look at the ZVs also. But these things continue to make another new high here. And I think this is, we're blowing off here, in my opinion. We're not in a new bull market for bonds. We're not. And trend line, I drew for you, trend line boys. We've broken out. Yeah. But again,
trend line, right on.
Yeah,
I love that. I don't look at that.
But I don't see us getting over this, thickness up here, 160. And frankly, this is the 61.8 from this recent high. So I pointed this out the other day, and I think, 147 to 152 to, 160, these are your different levels. But yeah, we could continue to drift up here, but I don't know how much more. I mean, they're going to raise rates next week. They're not going to cut. And I think that will put the end into this run for sure. I want to talk a little bit about yields. 2-year, 4.25, 10-year, 3.44. The inversion is huge. It's widening.
Yeah,
the inversion is wide.
Yeah,
the inverted yield curve is still widening. No time in history has that been good. No time in history.
And it's at the 1030s at a record inversion. 1030 record inversion. So I don't know what to think here. And I will say this too, we're seeing a little bit of a divergence between the bonds and equities.
And I think a lot of this has to do with just the fact that they took them down so hard, Bob, that now they're gonna squeeze those that are shorting too early, and that's what's happening. So just like those that were buying too early, now they're gonna squeeze too early. And I think they've got. I don't think they have a ton of room left to continue with this, because at some point somebody big's kind of come in and go, we can't keep going like this. And this is a level, like this 147 level is definitely a level up here. So that's kind of where we broke down from. So why wouldn't we go back and test it? It happens to be the 61.8, happens to be a hole. It happens to be, the 6 month. This is a 6 month chart, really, from July to the end of the year that we're looking at here. So guess what? That's coming right to the top of that value zone. 6 month being the time zone that we're trading on. This is probably the time chart that I would say put your money on right now. And the risk for me seems to be 147 to 150. That would be the area you'd probably want to put some on. And again, this area, this ceiling up here is even bigger. Why wouldn't we trade back to 136 early in the next year? Why wouldn't we?
I love it.
So I think this is going to be a multi-year, multi-month trade that you can put on for the next few months. I'm not talking a short-term trade. Short-term traders, like Triplex, who are every day going in there and battling. Yeah, it's a trend day up again. Today is a trend day up. But beyond that, you got to ask yourself, is it going to continue? Is it going to go up every day like this? Like it's been going, again, this is just today, trend day up. Blew this out on that number there at 7 o'clock on the jobs, and then came back and testing it again. But I don't know. I don't want to be chasing this thing too much longer. That's me.
All right, Matt. That's what we got. Feeling, you know, Matt, I changed up. Nobody even commented on it. I'm going to the home blues on the coat.
Yeah, you got the Honolulu Blue Detroit Lions coat.
Yeah,
You know, you change teams. You're smart because the Bears are out of it.
I got rid of the black and orange, and you know.
By the way, my oldest son, is in the Justin Fields camp. He says he's had a great year and he loves them. So apparently, but again, it must be fantasy stuff because I don't get it. I don't see it.
Matt, I will continue to say it. If you can't hit a guy that's wide open in stride, you got real problems. You just do.
You got real issues.
I mean, Bill Walsh would be freaking out on this kid, like absolutely freaking out. That's my problem. His athleticism is fantastic, right?
He wouldn't play him, Bob.
He can extend plays. He can run great. Nobody's questioning that. He's an absolute physical marvel. But the third progression and hitting guys in stride it's the nuance in the NFL that makes teams great. And you see it with Brady, and you see it with you saw it with Drew Brees. I don't know why he jumped into my mind. You just see that they hit guys in stride, so yards after catch are, you know, seamless for these great athletes. Seamless, and I don't see that with Justin Fields. I just don't see that enough. And I don't know. I'm sticking with it. Aaron Rodgers. I'd still take Aaron Rodgers. You know,
so
on a year-over-year basis.
You know, who are they gonna? Who are the Bears? Are the Bears gonna get a new quarterback?
No, hell no. This is the way that the Bears will operate. They will choke on this for 3 years. That's my 3 years.
And then they'll trade him to the Lions for Goff, and then Goff will win the Super Bowl.
Listen, Goff is better than he's playing well, dude.
He is playing well. No, I mean,
he's better than Stafford for sure this year.
Well, Stafford's been hurt, and I mean, Goff is again.
Listen, the Lions are going to make the playoffs. Playoffs.
I mean, they'd have to win out. I don't know, Bob. I'm not going there yet. They're 5-7. They got 5 games left. I mean, if they win out, which not easy to do, but I mean, I hope you're right because I really don't care, but I hope you're right.
Yeah, of course you care. This is what Lions fans say. Secretly, deep down, there's an Alex Karras gene in you.
No, there's not, because I wasn't born when Bobby Lane was around in the 50s. I wasn't even close to. I wasn't even a twinkle in my dad's eye. Give me a break. So, no, my dad was barely a Lions fan. He had to take care of the house and raise his 2 brothers. Didn't have time to be. They weren't talking about Lions. Right.
Lions, Tigers, and Bears. Oh my. All right, thank
you.
But
how about some of these contracts? You know, Aaron Judge stays in New York for $40 million a year for 9. Getting rich. He could have gone home. He could have gone home to California, passed up the 300 from San Francisco to stick in the dirty apple. I don't know. I don't know if I don't know which is worse, the dirty apple or the, you know.
Oh, come on. San Francisco is head and shoulders worse than New York, especially with $40 million in your pocket a year to make your life leisurely.
You think?
Yes, 100%. 100%. Way better.
I used to like San Francisco more, but I don't know.
Yeah, go there now and try to.
I've been there twice in the last couple months. It's fun.
Yeah, you got to wear HIV-proof shoes just to walk around downtown.
Oh my God! How about?
All right, that's what we got. We'll continue our conversation inside Market Vitals. Join us at marketvitals.io. Please go to Amazon.com and buy some Shrimp Mojo. Thank you, Matt. Thank you, Lee. Peace out.